I mean, I think one thing to keep in mind about investing in general is there's very strong signal value when someone buys something. There is very weak signal value when someone sells something. So in general, if we are looking at Buffett's portfolio and we see that he bought something, that is very important to pay attention to. But when he sells something, that is not as relevant because we buy things only for one reason. Okay? We buy things to make money.
Yeah.
We sell things for 100 reasons.
Many
okay?
reasons.
Hey guys, welcome back to the channel. So there's been some big news out of the 13F world the last few days. It recently came out that the Daily Journal stock portfolio, which is run by Charlie Munger, has sold half of their stake in Chinese e-commerce giant Alibaba, selling 50% of their shares in the first quarter of 2022. So today I want to share my thoughts on a few reasons why Munger might have done this, and also how I think about Alibaba as a business going forward. Full disclosure, I am an Alibaba shareholder, so my opinions are from the perspective of someone who's long the stock. So for anyone who's been following Alibaba or Charlie Munger over the last year or two, you'll already know that Charlie turned some heads in the investing world when he first bought a large position into Alibaba back in February 2021. At the time, Alibaba was trading at around $250 a share, after dropping from its all-time highs of over $300. This move from Charlie after being inactive for so long sparked a huge wave of interest from his disciples, and it made a lot of people realise that Chinese tech giants traded at incredibly cheap valuations compared to their Western counterparts. Many notable investors like Mohnish Pabrai, Guy Spear, and thousands of retail investors cloned Munger and bought shares as well. And I too was one of those people, I admit. The timing was unfortunate because it was right when the Chinese government started cracking down on tech giants with new rules and regulations. And there was even whispers of Chinese stocks being delisted from US exchanges. As is usually the case when there's any sort of uncertainty with a company, the stock got hammered by over 50%. Charlie got everyone's attention again when he decided to double down and then triple down on Alibaba, initially doubling his position in August 21, and then doubling it again in November 21. Everyone, including myself, has been eagerly awaiting his latest 13F to see if he's still buying, given the fact that Alibaba has dropped to below $100 for the first time ever. And I think it shocked a lot of people when it came out that he sold half of his position in Alibaba sometime in February or March of this year. So let's theorise about why Charlie might have sold half of his Alibaba stake. There's 100 different possibilities, but essentially there's two main reasons why you might sell a losing stock. First, there's the obvious reason, and that is you made a mistake and you've lost conviction in the company and its future prospects. You might have overestimated Alibaba's future projections, or its management, or a million other things. It's not uncommon to misjudge a company, and even Charlie Munger isn't immune to making a mistake here and there. Buffett frequently mentions in his letters that he's made many mistakes and he'll make many more. So it's entirely possible that Charlie decided he messed up, and he opted to just cut his losses and sell half of his position. Unfortunately, we won't know for sure unless he speaks about it. But if I had to guess, I'd say this is unlikely, and it seems to go against his nature to sell so early and in bad market conditions. It's pretty widely accepted among investors who do believe China is investable that Alibaba is more or less undervalued, so it's selling for less than $1 on the dollar. I like to think that it goes against Charlie's nature as a long-term value investor that he wouldn't panic sell for less than 70 cents on the dollar. In saying that, he might have re-evaluated Alibaba's intrinsic value and found it to be less than his sale price. So in his mind, he was selling it while it was overvalued. It's impossible to know for sure, so we can only speculate. The other reason to sell a losing stock is for tax purposes, and I think this is more likely the reason why he sold half his position. This is the reason Mohnish Pabrai gave for selling Alibaba for a loss, just a couple of months after he bought shares.
In the case of Alibaba, one of the reasons I sold Alibaba was for tax loss harvesting. Okay, and there were actually two reasons why we sold Alibaba. Probably more than two, but two are at least enough to justify it. Is that I had studied and learned about Tencent and Process after we had made the Alibaba investment. What I did with the Tencent Alibaba deal was I sold Alibaba. I moved the proceeds to Process, not Tencent, because Process is even better than Tencent.
So essentially, selling a stock for tax purposes is really simple. When you buy a stock and sell it for a profit, you have to pay a tax on the capital gains that you made. Whereas if you buy a stock and it goes down and you end up selling for a loss, you can use the loss to offset some of your gains, and you pay less tax because the loss reduces your taxable income. For investors who operate large funds, this can make a big difference in offsetting some of their large gains, and they pay way less in tax over time. And like Pabrai says, there's also the two birds in one stone situation, where if you have another investment opportunity that you need capital for, By selling a losing stock, you harvest the loss for tax purposes, while also freeing up capital for your new investment. So maybe Charlie has another investment opportunity on the go, and he's also harvesting the loss for tax purposes. It's so hard to say, but hopefully Charlie gives us some answers if he makes any appearances. If I had to guess between the two, I'd say that he sold either for tax purposes or for a new investment opportunity, and not because he lost conviction in the business. He said this only a couple of weeks ago about his China holdings including Alibaba, so I think it'd be strange for him to 180 so quickly.
Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China. When you buy Alibaba, you do get a sort of a derivative, but assuming there's a reasonable honor among civilized nations, that risk doesn't seem all that big to me.
So in terms of the business itself, Charlie selling doesn't really change my thoughts on Alibaba. I definitely cloned the idea from Charlie and Mohnish initially, but I also understood the company well and I researched it thoroughly before I started a position. One of the issues with cloning is when the cloner doesn't do their own research. And then a situation like this happens where the person they're cloning sells their position and you have no idea why. Proper cloning still requires you to understand the business and do your own research, so you develop your own convictions and beliefs in the company and its management. I still have a lot of confidence in Alibaba, and Charlie selling 50% of his stake doesn't really change my thoughts on the underlying business. It's still a great company and I think it has a bright future. I think the wave of regulations is reaching the finish line, and once investors realise that China is a great country with wonderful businesses and an enormous growing economy, I think Chinese stocks will be back in everyone's good books, and investors who bought low and held will be rewarded. Of course, that's just my biased opinion as a shareholder, so please don't take my word for it. Overall, I was scratching my head a little bit when I saw the 13F come out and I'd seen Munger had sold. But like Pabrai says, there's a million reasons why someone might sell a stock, and it doesn't give you a clear signal about what they're thinking about the business. Let me know in the comments below about what your thoughts are about Charlie selling Alibaba, and if I missed any potential reasons why he might have sold. If you enjoyed the video and you want to support the channel, I'd really appreciate it if you hit that like button. And if you want to see more videos like this one, then hit that subscribe button. And if you're still bored, I'll put another video up in the corner that I think you'll find interesting. If you've watched the video all the way to the end, thank you so much for watching and I really appreciate your support. And as always, this video is not financial advice and I am not a financial advisor. So please always do your own research before making any investment decisions. So that's it for today. Thank you so much for watching and I'll see you guys in the next one.